5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Ceasefire extension. The US and Iran reach a preliminary deal to extend the ceasefire for 60 days, pending approval from President Trump. Stocks rise to records. Oil drops on the tentative agreement. And a tale of two AI IPOs. SpaceX said to be cutting its valuation goal, while Anthropic's latest funding round puts its valuation above rival OpenAI. Well, let's get a check on the markets around the world now. First, let's get to Winnie Su for the latest from Asia. Winnie.
Good morning, Bonnie. A very happy Friday from Asia. We're looking at the MSCI Asia here up nearly 2% on that optimism for a tentative ceasefire between the US and Iran. And here we have Japan's Topix index rising for a fifth week, but also the tech rally continues to drive Taiwanese stocks higher. We've also just heard from the government that they've raised Taiwan's GDP and export targets forecast driven by the strong demand for AI. Now you flip aboard, we take a quick look at South Korean markets because Kospi here is up 3.6% to another fresh record, and that is coming after Korea's pension fund raising its domestic stock target driven by how far the Kospi index has run. Now, interestingly, we are actually seeing that strong rally prompting foreign investors to sell the South Korean stocks driven by their diversification purpose, and hence we're seeing the Korean won here weakening by about 1%.
Yeah, a fascinating story. If you get to 10% of your holdings in a single stock, you have to exit a little bit, right, Winnie? And that's what's happening there with those two Korean stocks, Samsung and SK Hynix. All right, let's get over to London for a look at Europe now. Here's Louise Moon. Louise.
Morning, Bonnie. What we're looking at really this morning is yields across the Eurozone rising slightly on a host of inflation prints that we've been seeing. So we've had France and Spain both posting inflation that was slightly below expectations, but still accelerating at the fastest pace since 2024, so boosting those yields this morning. There, we're expecting Germany slightly later today. Now, it's still holding below the kind of 3% threshold at the moment, but we're waiting on that inflation print. Our analysts are saying most of that is already priced in, so you wouldn't expect too wild of movements, but we'll wait and see how that pans out, but ultimately boosting the case for rate rises by the ECB. Now, taking a quick look at currencies, we're looking at the euro, US dollar. The euro is little change today. You can see just there, just really little change on the back of this geopolitical news, but a note from analysts saying that, there could be a 1% rise in the euro if the strait were to open. So keeping an eye on that as we round out the week here in Europe.
Yes, certainly that ceasefire extension in the ether today. Louise Moon, thank you so much. And you can see it in the United States as well. I just want to point to the fact that we hit records for the four major indices yesterday. Again, the S&P, the equal-weighted S&P, the Nasdaq 100 and the Russell all together making records. And it looks like we might extend that on this last trading day in May. We're up 5% on the S&P 500 already in May. We might add a little more today. But for the Nasdaq 100, we're up 10% just this month alone. So it has been a blistering rally. And of course, Dell is going to aid things today. Brent crude also helping. This extension, tentative albeit, until we hear from President Trump, is definitely causing some relief in the market. The VIX is trading with a 15 handle. And if we look at the bond universe now, we'll also see that we've been pricing out everything that we had priced in last week. So the 2-year yield is actually flirting with the 4% level now, the 10-year yield at 4.45, and that 30-year yield that was well above 5%, it got to 5.13 and even higher, is now well below that mark at 497.76. So some money going into bonds. Also, the dollar index is up about 0.7% for the month as well. Many strategists saying that this could potentially be the high point. We might see a little bit of a sell-off. And just one note of caution on oil. Halima Croft saying she still thinks that the beginning of the war, so the 27th of February, marks the high point for Hormuz crossings for the foreseeable future, because even if there is a deal and it is extended, this ceasefire, we'll only see crossings in one direction and we won't get to that rate that we had been seeing them before the war. All right, let's get to some individual movers now. Over to Chloe Melly in London. Chloe.
Good morning, Vonnie. Dell shares are soaring this morning. We're up almost 40% after the company gave an outlook that was way ahead of what analysts had expected, and that was driven in particular by very strong demand for its AI servers. And so this really confirms the company's status as a big AI winner. And so we're up very, very strongly there for Dell this morning. Moving on to Gap, which is seeing a bit of weakness this morning. We're down, actually quite a lot of weakness, down more than 15% after results that were a little bit disappointing. We had quite a mixed picture, and in particular a poor performance in the Old Navy brand, and Gap actually blamed that on poor execution rather than any sort of macroeconomic issues. And so we're seeing that really weighing on that stock this morning. And finally, let's end with cybersecurity firm SentinelOne, which is also down very significantly this morning, about 20% after a weaker than expected guidance, and also announcing some big job cuts as part of a major restructuring, and that actually triggered Raymond James analysts to downgrade that stock. So on the back of that downgrade and those earnings, we are seeing a real drag in the shares this morning in pre-market trading.
These post-earnings moves, absolutely unforgiving on the downside and the upside. Chloe, thank you so much. Chloe Melly there. Coming up this hour, we're going to be speaking with Cole Smead, CEO of Smead Capital Management. So the US and Iran have reached a preliminary deal to extend that ceasefire by 60 days and to discuss the future of Tehran's nuclear program. Treasury Secretary Scott Bessent says President Trump's 3 red lines, reopening the strait, Iran surrendering highly enriched uranium and ending its nuclear program, remain in place. Jumana Brzezinski, anchor of Bloomberg Horizons Middle East and Africa, joins us now. Jumana, we have heard these kinds of statements before. The market certainly seems to be taking this very seriously and just waiting President Trump's sign-off. But there are these red lines still. How do you imagine that we've come to some kind of an agreement on these in the last, several weeks?
Yeah, well, the mood music is certainly sounding very positive right now, Vonnie. And everything that we have learned over the course of this week suggests that we are indeed close to a deal. Yesterday, our Bloomberg colleagues, alongside other news outlets as well, Axios, saying that the two sides, US and Iran, had actually agreed to a deal. This would be a memorandum of understanding that would entail an extension of that 60-day ceasefire, which the first 30 days would require Iran to fully open the strait, unrestricted access to fully demine. Throughout that period as well, they would then begin a formal process of negotiations around the nuclear file. Now, the question here is what exactly the US are giving up in terms of economic relief, in terms of sanctions relief, and also in terms of the unfreezing of assets. That has been one of the sticking points. Yesterday, the Treasury Secretary, Scott Bessent, was asked about it, and he said President Trump has reiterated his 3 red lines, and you spoke about that in the introduction to me. Number 1 is unfettered access for all ships to pass through the Strait of Hormuz. So that is one of the key conditions there. The second, of course, being that Iran has to some way dispose or hand over that highly enriched stockpile of uranium. And then the third point is that they have to commit to not pursuing a nuclear weapon. And that's just not enough to commit to verbally. You also have to commit to inspections. So what is likely to happen here is if there is a breakthrough, and indeed we are awaiting full sign-off from the president, we haven't heard from President Trump yet, we will most likely get a framework for a deal, and then perhaps weeks, months of prolonged negotiations around the nuclear file. So yes, we have been here before, but I will say, Vonnie, this time does feel a little bit different, namely because you have the US talking about great progress on negotiations, you have the Iranian president saying they're committed to diplomacy, and you have the addition of Gulf Arab states pushing to get this over the line as well.
All right, Jumana, thank you so much. Jumana Brzezinski there, anchor of Bloomberg Horizons Middle East and Africa. Futures steady after hitting a record on the S&P and many other indices. For more on this risk-on trade, Bloomberg's Morwenna Conium joins us now. Morwenna, we're up 33% in the tech sector on the S&P 500 just in the last 30 days or so. We have software up 21%. What stops this market in its tracks? Is there anything out there, any kind of risk event?
Well, obviously the big risk event that is still weighing on markets to an extent is the uncertainty around the truce between Iran and the US. We are still waiting for Trump's sign-off, and whilst we've seen a lot of positivity in response to the latest developments, I think what we are seeing is a certain element of market fatigue. Had this been a few months ago, we would have seen a much more positive response, I think, than we've seen. I think it really is the tech and AI impetus which is maintaining the momentum, because we're seeing it in US stocks quite considerably more than we are elsewhere in the world. And that positivity has really sort of come back from a period of slight uncertainty, but it is quite a sort of volatile space. There's a lot of scrutiny. It only takes a miss or a disappointment to destabilise that trade. But so far today, we are seeing it very positive, particularly coming through, obviously, from Dell, really supporting futures there, and as well as, we look around the world, and Taiwan's GDP based on the AI sort of chips is quite astounding. So there is a lot of positive sentiment around AI and technology at the moment, which is actually perhaps adding to, but really way overshadowing the global sentiment towards geopolitical developments, because there is still uncertainty, and we're seeing that reflected more clearly in, say, the bull market, where those moves are being sort of looked through to an extent, and they're very much wait and see mode.
All right, Morwenna, thank you so much. Bloomberg's Morwenna Conium there for us. So more on that tech space now. SpaceX lowering its IPO valuation target to $1.8 trillion, down from $2 trillion. Sources telling Bloomberg that the goal was lowered after consultations with advisors and investors. Joining us now is Matt Bloxham of Bloomberg Intelligence. So much to talk about, but let's begin with this lowered valuation. I mean, it's still eye-watering at $1.8 trillion. It's insane, but should we at least say that maybe appetite has softened a little bit, Matt?
Yeah, like I said, that $1.8 trillion equates to about 100 times trailing sales. So it is a big multiple, but not too dissimilar to what we're seeing for Anthropic and Rocket Lab, which are arguably two of the interesting peers. I mean, I think this kind of price discovery is inevitable in any IPO process. They'll have spoken to a number of big potential anchor investors in the deal and will be incorporating their feedback. And the bankers will be looking to pitch the valuation at a level which makes Elon Musk happy, but also leaves enough on the table for anchor investors so that, when this thing starts to trade, there's a bit of a positive pop and everybody feels like it's been a successful IPO.
Yeah, absolutely. Well, let's speak about other IPOs. Anthropic raising at a $965 billion valuation, so just shy of the $1 trillion mark. I don't know if that was on purpose somehow or no, but it has now eclipsed OpenAI's valuation for the first time. Is it a more profitable, better run company?
It's a good question. I mean, I think certainly in the first few months of 2026, it definitely had more commercial momentum with Anthropic. All the anecdotal evidence is that enterprises are really liking the agentic solutions that Anthropic's bringing to the table. Obviously, we've seen things like Claude Code, so it's kind of got real strong traction with its target enterprise customers. And I think that's kind of reflected in these kind of fairly rapid expansions in the implied valuation of the funding rounds they've been doing in the last 4 or 5 months. And again, as I mentioned earlier, this is kind of roughly 100 times trailing sales multiple, but the pace of growth is so significant that if you look forward to a 2026 estimated revenue run rate, that would drop to about 20 times forward sales. So, these things are growing incredibly quickly.
Matt, thank you. Matt's going to be back a little later on to talk to us about Dell as well. Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Inflation in France and Spain accelerated to the fastest pace since 2024. Over the past year, consumer prices rose 2.8% in France, 3.6% in Spain, propelled by surging energy costs. The reports boost the case for the ECB to raise interest rates in June. Romania accused Russia of a serious and irresponsible escalation after a drone entered its airspace early Friday. The drone crashed into an apartment building in the eastern town of Galati, injuring 2 people and sparking a fire. The incident was the most serious of its kind for the eastern flanked NATO member since Moscow invaded neighboring Ukraine. Blue Origin's New Glenn rocket exploded during a test on a Florida launch pad, dealing a major setback to the Jeff Bezos-backed company. According to Blue Origin, the rocket experienced, quote, an anomaly. It wasn't carrying any payload. The blast threatens plans for future New Glenn missions, including Amazon's satellite network and NASA's Artemis moon program. Coming up, the cost of Putin's war in Ukraine. A look at that and what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting Americans are falling behind on a total credit card balance now of $1.25 trillion in the first quarter. Delinquencies are up 13.1% according to New York Fed data. The Journal says credit counseling agencies are being flooded with Americans straining to pay off their debt. Next up, the Financial Times leading with reporting that shows Russia's spending on Vladimir Putin's war in Ukraine is on track to blow through its budget to the tune of $28 billion this year. The FT says it's forcing the Kremlin to consider deep spending cuts in the coming years. While higher energy prices have helped, the FT says, the boost has been tempered by payments to Russian oil companies to limit domestic petrol price rises. And on the front page of the New York Times, the Justice Department examining the funding of lawsuits brought by E. Jean Carroll against President Trump. The Times says E. Jean Carroll is an author who has never sought a public role, political power, or governmental authority, which sets this investigation apart from those of other prominent figures such as James Comey and Letitia James. Coming up, we look at the fast-growing Polish economy and how it became a standout in Europe. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The story of Europe in recent years has often been about a lack of growth, but there are exceptions. Poland, now one of the world's fastest growing economies. Wall Street Week travelled to Warsaw to find out why.
I think a lot has changed, and especially for people like me with the backgrounds like I had, I wanted to work on the edge of new technologies. I really wanted to be exposed to the best R&D, the best teams that are building effectively the future of what the technology sector is. I don't think that these opportunities were as obvious 10 years ago and as available as they are now.
In 1999, we had GDP of 67 billion US dollars. Last year, GDP of Poland reached 1 trillion. There was only one country in that period that had a higher pace of growth, and it was China.
What were the things that drove that performance over that long period of time?
Well, first of all, the reforms of the early 90s, strong institutions that were established here at that time. Of course, the entrepreneurship spirit of Polish people who helped in this process. And of course, with no doubt, joining European Union in 2004.
The startup scene is very vibrant, and when I think about this word, I think it really represents what's currently going on. I think that this ambition and this certainty that whatever is being built from here or by Polish teams has this potential of becoming a global solution.
For more, Bloomberg's Simon Hampton joins us now. So Simon, plenty of growth problems in many countries in Europe. What has Poland done differently?
Well, I think it's worth remembering as well that Poland came from a very low base. So 30 years ago, I think the average Pole had about the same spending power as Jamaica. Now it's about the same as Japan. So it's definitely gone up a lot. It's a big growth story. But I think it's worth talking about the diversification of Poland's economy. They've always been a strong manufacturing base. But traditionally, that was sort of parts assembly, and they've moved that up the value chain. They've expanded their tech sector. McKinsey projects it's worth about $45 billion now. They expect it to be worth about $130 billion by 2030. Defence as well, they're setting themselves up as a big defence exporter. So their economy has really diversified. They've attracted a lot of Poles back to Poland as well as part of that. So that's really been a sort of symbolic of their success story.
Yeah, the reverse brain drain, right?
Yes.
And we just heard Poland acceding to the EU in 2004. So it's only 22 years in the EU. And if you think about it, that was right before the great financial crisis. So it's obviously used used to dealing with problems. What are the challenges that now lie ahead for Poland?
Well, there's a few. I mean, there's a war right on their doorstep, which is significant, and they're spending a lot of money on defence. I think defence is about 7% of their GDP. That's contributing to a big fiscal deficit, which I think is around 6%, so around double what the EU wants. Like much of the Western world, there's also a demographics problem. Poland's working population is expected to decrease by 20% by 2050. But Poland's doing things about that. The previous government ended state funding for IVF. They've brought that back under Donald Tusk, who was elected in 2023. And that's produced, I think, 7,000 pregnancies since then. So there are some bright spots, but also some challenges definitely on the horizon for Poland.
I cannot wait to see this. So it's tonight on Wall Street Week.
Tonight on Wall Street Week, yep, you can hear a deep dive into the Poland success story.
Yeah, well, it really is the poster child in Europe, right, for, you know, an economy that had been sort of basically a communist economy and then acceding to the EU. And you can see Ukraine trying to do the same, right? It's desperate for access to the European Union. Simon, thank you so much. That is Simon Hampton there. You can watch Wall Street Week every Friday at 6 p.m. New York time. Coming up, we're going to be speaking with Cole Smead, CEO of Smead Capital Management. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Ceasefire extension. The US and Iran reach a preliminary deal to extend the ceasefire for 60 days, pending approval from President Donald Trump. Stocks at records, oil falling on the tentative agreement. And a tale of two AI IPOs. SpaceX said to cut its valuation goal, while Anthropic's latest funding round puts its valuation above rival OpenAI. So let's take a look at those records then, which looks set to extend today, this final trading day in May. Talk about going out like a lion. The S&P is up 5% just this month. The Nasdaq 100 already up 10%. And yesterday, they both hit records along with the equal weighted S&P and the small caps. The S&P Tech Index up 33% now in the last 2 months. It's been really a whopping ride. We've also seen the dollar stronger. It's up 0.7% on the month. And if we look at bonds, well, yields are down. In fact, just this week, the 10-year yield down 11 basis points. We're at 4.02, watching that 4% mark. And across the board, you're seeing yields decline. A safety trade, a relief trade, and just this correlation that we've seen with stocks and bonds going up together. Also, you know, some value maybe to have been had in the last few trading sessions. Let's get to some individual movers now. Here's Chloe Melly. Chloe.
Good morning, Bonnie. Dell Technologies shares are having a fantastic day today after the company gave an outlook that was way ahead of what analysts had expected. And so they are really benefiting from very strong demand for their AI servers. And the CEO said that this AI opportunity was really showing no signs of slowing down. And we can see that reflected in those shares this morning, up almost 40% there for Dell in pre-market trading. Moving on to the retail space, and we have got actually Gap shares down significantly this morning after quite a mixed picture with the earnings, and in particular a poor performance for the Old Navy brand. And so Gap actually blamed execution for this rather than the macroeconomic environment. But those disappointing earnings are really weighing on that stock this morning. And finally, let's end with another move to the downside, and we've got the cybersecurity firm SentinelOne down almost 20% after weaker than expected guidance, and also some big job cuts as part of a restructuring. And so we have got those old fears around software and AI really coming back to the surface there. And so we're down very significantly there for SentinelOne this morning as well.
All right, Chloe, thank you so much. Chloe Melly there in London. Futures rising now and at all-time highs as traders brace to see whether the US and Iran could get that peace deal across the line. Halima Croft of RBC Capital Markets, though, with a warning. She writes this: though we were not ruling out some sort of MOU being inked, the headlines and oil price impact appear to be running ahead of reality when it comes to an actual deal. We would caution readers that we have been here before, and the original imminent MOU story broke 3 weeks ago and nearly 300 million barrels of lost production ago. Joining us now is Cole Smead, CEO and Portfolio Manager at Smead Capital Management. So a real red flag there from Halima Croft, who says many more things that make complete sense, Cole. I know you've said that fading these peace deals has been a good strategy, but somehow something feels different this time, does it?
Well, I mean, that could be the esprit de corps of the moment. I mean, something feels different this time, whether we're talking about the plunge in supplies and energy globally today, or the fervor and enthusiasm for the technology mania that we see going on, on a day-to-day basis. I think that's really what people are saying. Investors, are typically saying, well, what does this tell us about the future? So to your point, and think of 1 year ago, Vonnie, we were looking at $60 or less a barrel on WTI, and everyone was proclaiming that, right? What's the future telling us? And as we learned, it was actually telling you nothing. It did not forecast the future very well. It did not tell you that there was an unknown problem that we had talked about in war games-like scenarios. The Hormuz, this situation's been talked about. It's just never been as a believable path in the future. And now we wake up in the most unbelievable path, at least in this industry, and the market seems to be pretty careless and doesn't seem to really think this is the crisis that folks like you just commented and mentioned. The industry people think this is a crisis, and yet the market's shrugging it off.
Well, you're very interested in energy, and with oil down 19% so far month to date, and we could be heading for another couple of percentage points of a decline, would you be lightening up or maybe putting off some of your ideas? I know you've been looking at a couple of Canadian companies in particular.
Yeah, it's a great question. It's a really weird position for our investors to be. I mean, just to give you a feel, Vonnie, in our U.S. portfolios, we have about a quarter of our portfolio sitting in energy, and those are producers. Those are E&Ps, oil companies, dominantly in the U.S. with one in Canada, which is Cenovus. And then in our non-U.S. portfolio, it's dominated by Canadian E&Ps. And so I point that out because we're one of the larger owners of, say, mutual fund managers out there in the country. And it's a weird tension where, on one hand, our investors have made really good money this year off of that. On the other hand, we get questions around, gosh, you own so much. Have you kind of done something stupid? Which, I mean, to quote Mae West, too much of a good thing could be wonderful, is how we think about it. That being said, I think we're also asking the question of, until the market really catches up to this tension and this supply issue, there is money sitting out there on the table, and we want to be very patient to that. Just think about this. Let's just say that this issue subsides, and how it likely subsides is there's a fever pitch crisis some point at the summer, and prices have to rise further for markets to alleviate in some way. To rebuild these inventories of, say, 1 billion barrels by the time we get to that point, what price will be needed? We know that $100 does not cause Permian producers, as an example, to go out and drill. And so what price will it have to be, kind of from a longer-term perspective? And I think the changeover's got to be in the futures market. If you look at the oil futures right now, the curve's in terrible backwardation. We probably will not end the great era of ownership of energy producers in the oil space until we're in contango in that market, like we were back in the 2010s when drill, baby, drill was the esprit de corps.
So might now be an opportunity to actually buy at more attractive levels if you really think oil is going to go higher again mid-summer, Cole?
Yeah, I think about it as, as this move has gone on, the metric we've been looking at is enterprise value per flowing barrel. And I think that really stacks up to be, in certain types of basins. So, for example, if you're looking at long life assets like tar sands in Canada, that's a good metric to go lay out. And then you have to ask questions like, are there downstream assets that would cause that metric to be off? And how do you value those downstream assets? That's the analysis we're doing. I think what it's proven time and time again, though, is torque. The operating leverage from higher prices, to your point, Vonnie, that's been the real reward and the real winner. And that's what people haven't wanted to own. So again, 1 year ago, Chevron and the big players were what investors wanted. And now we wake up in an environment where they've done well, but they've just lagged, the higher torque names.
What do you do about tech here, Cole? Obviously, we're up 33%, as I said, in the last 2 months on the tech index. Is it time to run for the hills here?
I mean, this is a mania, Vonnie. This is a mania. This is a mania like you'll rarely see in your career. I think of it like a fever. You just got to sweat it out. And it's just very normal. I hate to say this. It's, people think this is, conspicuous and crazy. In some respects, it is. It doesn't happen every day of the week. At the same time, this is a very normal part of capitalism. Is AI going to grow a lot the next 20 years? Yes. There's no question about that. I think I was on a panel yesterday in Dallas talking about this with a group, and I think what's being missed is that when technologies explode in use the internet. Think of the 14.4 modem in the late 1990s versus the internet we have today. We pay way less for great data than we ever have in that respect. And so the adoption of the internet came because of low prices. And so the idea that these things are all going to come at high prices and there's pricing power, that's not what happened with the internet. That's not what happened with the computer that really preceded the internet. And so as we see chip prices come off on GPUs right now, there's been a pretty big move in the last few weeks here. The way that AI proliferates is low cost. The only problem is if you look at, Moody's came out this week and said there's $800 billion from the hyperscalers in off-balance sheet commitments right now. Yep. And that's not counting, what'll be there in a year. The math just isn't mathing. It's really tough to find out where cash is being generated. And it's weird to say that we've taken the best asset-light businesses in the world and made them maybe the lowest return capital-intensive business in the world. But again, the market doesn't care about that now. Maybe they will later. It's not dissimilar, Vonnie, to the market loving oil companies back in the 2010s. And you get to the pandemic, and it's like, wow, what a misallocation of capital.
Yeah, well, Cole, can't wait to speak to you a little bit into the summer, and we'll see where things stand then. Cole Smead, CEO of Smead Capital Management. Now to other top stories trending on the terminal this morning. The US military is quietly seeking to boost its ability to deter or battle China over Taiwan. This includes new warship-killing bombs and advanced sea mines. A report from the head of the US Indo-Pacific Command, obtained by Bloomberg, warns China's military is expanding across all domains and training for Taiwan-focused missions. A high court in Kenya has temporarily blocked the government from approving a deal with the US to establish an Ebola quarantine facility in the country. The ruling also bars authorities from admitting or receiving people exposed to or infected with Ebola into the country. Blue Origin's New Glenn rocket exploded during a test on a Florida launch pad, dealing a major setback to the Jeff Bezos-backed company. According to Blue Origin, the rocket experienced, quote, an anomaly. It was not carrying any payload. The blast threatens plans for future New Glenn missions, including Amazon's satellite network and NASA's Artemis moon program. Coming up, what we know about this US-Iran deal that's awaiting sign-off from President Trump. This is Bloomberg.
The teams have been going back and forth, and President Trump has made it very clear, he talked about it at the cabinet meeting, that he has several red lines. And Iran has to turn over their highly enriched uranium. They cannot pursue a nuclear weapon. And the Strait of Hormuz, back to your question on energy, has to free transit. Navigation of the seas has to be free and open as it was before. So he's not going to take a bad deal. He's going to make a great deal for the American people.
Scott Bessent speaking at the White House as the US and Iran potentially extend the ceasefire by 60 days. Laura Davison, Bloomberg's Washington Deputy Bureau Chief, joins us now from Washington. Laura, how would they have got around the issues that were outstanding, including the full reopening of the Strait of Hormuz, without any payment on the part of any ships wanting to transit?
Well, it's not clear that they have actually reached that deal. A U.S. official has said a deal has been reached pending Trump's sign-off, but we've heard different sort of tunes from different parts of the Trump administration. You have Scott Bessent saying that they're still going back and forth on some of this deal. He declined to say it was happening. J.D. Vance said they're still negotiating the language, and the Iranians have yet to commit that they have actually signed off on this deal either. So it's not at all clear that despite sort of at least some deal existing on paper somewhere, that has not yet been made public, that this actually has the sign-off from the highest levels of both the U.S. and Iranian governments, suggesting that there has not been significant progress made from last weekend when we were sort of on pins and needles. Trump announced that a deal would be announced in the coming hours, and then nothing ever materialized. So again, Trump is planning to stay in Washington for the weekend. We'll see exactly what this kind of what the coming days bring here, but things still seem to be quite in the negotiation stage versus the finalization about to announce a deal stage.
Well, I think it's fair to say that nobody wants a return to any kind of hot war, right? That would just be ludicrous. But at the same time, it does seem to me that it's potentially more beneficial to Iran to extend for 60 days than the US, particularly if, the pressure points are building on President Trump.
Yes, yeah, and this has sort of kind of been the realization that the White House has come to accept over the past month or so, of that, Iran is willing to sort of dig in and take some pain and for what it could be some longer term gain, particularly because they have this influence over the Strait of Hormuz. There's been discussions about some sort of, joint project with Oman and some sort of, imposing some sort of tolls. That continues to be a red line for Trump. And we saw him say in the Oval Office this week that if Oman were to be involved in charging some sort of tolls for passage through the Strait of Hormuz, then, quote, the U.S. would seek to blow up Oman. So this is, kind of getting, you see the president's frustration creeping in, and also realizing that he doesn't have a lot of options. While domestically this remains a quite unpopular war, energy prices are rising, and his party, the Republican Party, is getting very nervous about the midterm elections in the fall in November.
It was an interesting reaction on the part of the president, wasn't it, Laura? I mean, it's the first time he's actually taken something proposed by Iran and said, yeah, let me think about it.
Yes, this is, he has been saying for weeks, if not months, that, that the U.S. has all the cards, that Iran wants to make a deal, that he, is eager to make a deal and seek diplomacy. But just the fact that he says he wants a couple days to think about it suggests that this deal doesn't outright, have all the pieces that the U.S. wants, which is the opening of the Strait of Hormuz, Iran to commit to never pursuing a nuclear weapon, and also the removal of Iran's enriched uranium supplies. Those, particularly those last two issues, have continued to be red lines on the Iranian side. So there's just, kind of this deadlock that has continued to seep in. And then the fact that Trump, sort of there's a deal on the table and he hasn't accepted it, also suggests, too, that there could perhaps be pressure from Israel, who has been, who have also been, looking to kind of, not settle too early in this war.
Yeah, absolutely. Well, we may hear more today. Laura, thank you so much. Bloomberg Washington Deputy Bureau Chief Laura Davison. Turning to tech, SpaceX lowering its valuation target to $1.8 trillion. It's expected to formally market its IPO as soon as June 4th. Sources telling Bloomberg the goal was lowered from $2 trillion after consultations with advisors and investors. Joining us now is Matt Bloxham of Bloomberg Intelligence. So where did the $200 billion go, Matt?
I guess just in, the sense of where people are prepared to kind of trade on this thing. But who knows, obviously people have only had a short amount of time to digest the S1 filing. We have the roadshow that's expected to start next week. So I think this valuation could still move around quite a bit, up or down. This is a pretty big valuation. That implies something like 100 times trailing sales, but this is a fast growing business, so on a forward multiple that will come down a lot. And if you look around the market, there aren't too many traded comps, and none of them are anywhere close to having the breadth or depth of SpaceX, but the likes of Rocket Lab and Anthropic also trading kind of around that kind of 100 times historic sales. So that kind of 1.82 trillion valuation feels very high, feels very full, but it's not out of line with what other companies are trading on.
I have to say, I think this may have been the most read S1 in history. Don't quote me on that, but I think certainly many hundreds of thousands of people have read it. I have to ask you about Dell. It's such a repricing. I mean, how did everybody get this one wrong? Dell shares up 40% in the pre-market, and it was already up 140% year to date. I mean, is there that much demand for AI services?
Yeah, I mean, it's quite a surprising positive reaction. I think clearly they had good news, raising the full year guide to about $167 billion of revenue. That's up 20% on their earlier guide of about 140 billion, and consensus was around that 140 billion. So definitely it looks like numbers are going to go up, and they're definitely benefiting a lot from the AIY. But I think there's two things here. I think clearly in the early days, people were just completely focus on NVIDIA as the only game in town on AI chips, but then actually as the market's matured, the likes of Dell, which has always been very strong in providing servers into the data center market, is benefiting from that kind of wave. And then as AI evolves and people realize that actually as we move from training into inference, and as corporates start to deploy AI models into their businesses, actually servers can start to use CPUs, not GPUs, and that's a historic area of strength for Dell. So I think that there's this growing sense that that they're getting a better exposure than expected to the GPU market, the kind of AI-specific chips, and actually they're going to get a second wave of growth from the CPU market, which is their historic hunting ground. So yeah, I think that's kind of what's behind this kind of wave of positive sentiment behind Dell.
Yeah, it's eye-watering. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. And it was a mixed bag for the latest retail results. Costco reporting stronger than expected earnings. Gap, though, lowering its sales outlook. It's struggling to win back shoppers. Joining us now is Bloomberg's Maddie Parker. Maddie, was the Costco a sort of a generic story, but the Gap story more specific to that company?
Yeah, exactly. So Costco obviously had some pretty pleased with results this morning. They saw higher than expected profit. The kind of big demand for them there this over the past few months has, of course, been demand for gasoline. It is priced at Costco a little bit lower frequently than its competitors. And so it seems that they're really benefiting from consumers that kind of looking to cushion that kind of wider fuel in fuel surge prices. I do think also it wasn't the only bright spot. They did say that they had reported to have sold kind of higher than ever numbers of goods, and it's kind of really good news for big box retailers and those retailers who kind of pride themselves on value, who seem to be able to kind of get a bit of an edge in this competitive market at the moment.
Yeah, hard to read the tea leaves when it comes to the consumer on this one. Let me ask you about Gap. It's a stunning defeat for Gap this quarter. Usually Banana Republic or one of the arms helps out the overall results, but that didn't seem to happen this time.
Yeah, exactly. I mean, Gap had to lower its sales outlook. It really is just the latest setback for them. They are trying pretty much every tool in the box to try and win back shoppers. We're talking splashy campaigns. They work with celebrities. They've even pushed into athleisure, which we know is an incredibly competitive segment of the apparel market. And it seems that after all of that, the kind of core namesake Gap brand is really the only one making the most progress. It's been Banana Republic, as you say, Old Navy saw sales disappoint more than expected. They'll say that consumers are obviously quite cash strapped at the moment. They're pulling back on discretionary spending. If they'll take any consolation, they saw some of the competitors like American Eagle also have some pretty rough post-market trading yesterday, but it just seems like a pretty tough time at the moment for some of those apparel retailers.
All right, Maddie, thank you so much. That is Bloomberg's Maddie Parker. And do tune in to Open Interest at 10 a.m. Eastern for an interview with Gap CEO Richard Dixon. Coming up, we'll get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead for your Friday trading session, the last one in May. So lots of Fed speak. We're going to be hearing from Mary Daly, Michelle Bowman and Anna Paulson, among other speakers. U.S. Treasury Secretary Scott Bessent will also be speaking. He'll be at the Reagan National Economic Forum. And JP Morgan CEO Jamie Dimon speaks at that same forum. Let's take a look at the macro picture now. Heading into your final trading day in May, and it looks like we might be continuing to extend these rallies. We hit rallies yesterday in the S&P, the equal weighted, the Russell 2000, the Nasdaq 100. We're up 10% in the Nasdaq just this month alone. Brent crude has something to do with it, down 1.6%. We'll see if that tracks and if that holds. At these levels, we're down 19% in May. And then that 10-year yield is at 4.44 at the moment, erasing so many basis points of gains from the week. That's it for Bloomberg Brief. Surveillance is next.